Hey everybody, this is TG Watkins with simplertrading.com, and this is your Daily 5. All right, so we're going to get into this a little bit different from what I normally start with. Typically I start with some major chart, SPY, something like that. And right now, hey, we've got a lot going on in the market. And one of the biggest conversations is all about the yield curve inversion and the recession coming up and all these other kind of things out there. And some of the conversation, like there's one part of the conversation just says, oh my gosh, I mean, look how inverted this is. This means recession, what's going to happen. Now, yes, the idea of the yield curve inversion preceding a recession is like 100% ratio. It's like always works, but it's not necessarily about it being inverted. It's really about when the yield curve gets back up to zero and starts to uninvert. That tends to signal the recession and when the markets go down. So you can see here, yes, this is what everybody's talking about, that this is the most inverted that we've been in a few decades. And so, yeah, potentially, this seems really, really serious. But we're trying to figure out when is this going to matter, and if it took, this long to get inverted, how long is it going to take to get uninverted? And so that is something to watch. I don't have the answer there. We're going to need to keep seeing this. The only other thing that I've also kind of picked up on is that it does seem to align up with when interest rates either flatten out or reverse. And this makes sense because as one interest rate starts to move up, the other one comes down because basically the bond market and people traders know what's going on and that they start pricing in bonds and interest rates in certain ways, and they know that it's there to basically take the punch bowl away. As interest rates go up, the Fed is trying to calm down the party and slow things down, and so this means that risk in the near term starts to be elevated, and this is what helps make the yield curve inverted. So it's not until really kind of things change the other direction that we start seeing that uninverted situation. Now, today is FOMC day, and whenever you guys see this, hey, things could be different because whatever the Fed says. Now, I think the consensus is that they're going to still raise 25 basis points. So if you look at where we are currently on the Fed interest rate line, we're still going up, and we could still be going up today. It's not, as I said, it's not really until we pause that the interest rates actually start to change directions. So, keep an eye on this. This is a living, breathing thing that we need to keep watching over the next several weeks and few months and see how this goes. Eventually, the Fed will pause. And then the next question is like, well, is the Fed pausing for good reasons or bad reasons? And if that's a few months down the road, we don't know what the market's going to do. I mean, maybe the market could actually continue to move up during a pause situation until they finally need to reverse, because maybe when they reverse, that's when the economy is doing poorly or something else comes up. This is black swan type territory, like we saw with the banking stuff. And I have an example about that we'll talk about. All right, so if we look at the SPY itself, we've got some questions. Namely, I look at this, this channel that we have, and in one way, I kind of look at this and I wonder, is this a bear flag? And look at this. And in one sense, we've also been going sideways for so many months. It's pretty crazy. Maybe this is good because the market's actually been very, very resilient, but maybe this is actually just a ledge until it starts to roll over. We don't quite know this stuff. And then we could say, well, is this a bear flag? A little pullback and an uptrend until we roll over. Maybe we have that. But the other thing I notice is where I have this yellow circle, the 50 has crossed over the 200. That's typically bullish. When you get the fast moving average crossing over the slow moving average, that's a change of direction. It's a change of trend. And we saw that with, you guys are familiar with, I'm sure, the death cross, and that's when you have the 50 cross below the 200. Well, now we have the opposite. And so this could potentially be bullish. So it is a little bit hard to say right now with the SPY because the SPY is literally going sideways. So we don't really have a direction, but keep an eye on these things. If the 50 continues to stay over the 200, it could actually continue to be bullish. We'll have to see how the market reacts to the Fed and kind of go from there. And then the other thing I've been seeing is, we had this level positive divergence, and that helps set things up. And here we have price down, Moxie Indicator up. That could help set things up. So for right now, things are looking generally bullish, but I got to kind of leave that open-ended for whatever the FOMC is going to do today and how the market reacts. So, give this a few days to settle in and see how it wants to deal with that. All right, then the other thing is, since we were talking about the financial crisis and banking and all that kind of stuff, I didn't want to go back and say, oh, like, look, we totally saw this and we made a ton of money on the short side because of the banking crisis. No, I wasn't looking at the XLF. I wasn't looking at KRE. I wasn't even looking at banks because I don't trade banks. The only thing I want to do here is show you guys how the Moxie indicator works so that if you trade banks, or if you're in finance sector, or if any sector you're in and you see these things, I want you guys to be able to see that the Moxie indicator helps keep you out. The Moxie indicator helps keep you safe, because we might not have known that a crash was going to happen, but the Moxie indicator in 3 different ways told you that you should not be long on this name, and this is true for anything that you might be trading. Number one, we could see that price was moving up on the hourly chart and you had negative divergence. That was kind of your heads up, like, oh, hey, price keeps going higher, but it's doing it on less and less energy. That's one way, just less energy. And then if that wasn't enough, there's your Moxie price trigger. That is the thing that's supposed to really call attention to you and give you a visual alert and saying, hey, momentum, energy is now negative. So you should really be careful about that, because if you're trying to be bullish, bullish doesn't work if your energy and momentum is negative. And what you could see is then price started to get underneath the hourly 50. Now, the next thing, you might be looking at this, like pull back to the daily 50. Like, oh, hey, pullbacks to the 50. I love that. That should usually work. Well, the thing about that is right here, you had 0 bullish setups. In fact, you had a bearish setup. This is what I call an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And again, how can you be bullish if energy and momentum is negative? And that's what the Moxie indicator is showing here, is that momentum and energy was still negative. There was not a bullish setup in here. So you had exit here, you had do not go long here based on the Moxie indicator, and then you had yet another confirmation as price started to fall off and go below the daily 50 on the daily chart. So this was telling you, don't be long in this sector. And yeah, as I said, maybe you missed the short, but you at least saved yourself a whole lot of cash if you got out, because all of the long signals started to fall apart. All right, then, interestingly enough, RIOT and Bitcoin and the cryptos are going crazy. They are absolutely going nuts, which makes sense. This is basically any crypto person or crypto promoter's wet dream, that there's a financial crisis going on in the banking sector. So yeah, they're like, there you go. This is why we need crypto and all that kind of stuff. So, whether you believe it or not, this is what's happening. And this is something that's important. So another thing that the Moxie indicator helps you with, remember this last one with the XLF, I said an inverse trampoline move was your sign to get out. How about a regular trampoline move? A regular trampoline move is when price is below the 50, but the Moxie indicator is above 0. And you could see that this one was price flagging right into an uptrending daily 50 with the Moxie indicator above 0, and that thing exploded to the upside. This is exactly opposite of what the XLF was. And then you could even see here more confirmation on the hourly. There's your double bottom. There's your positive divergence. There's your price trigger. It was all right here. And these things just exploded. So again, these things all love whatever's happening with the financial sector, because it's like, hey, come over here. We're doing great. We're doing great over here. So now you just kind of have to find your way in. Maybe up here is not the best place to initiate a trade, see if there's a flag or a pullback or something like that. But those setups were there. And then another interesting spot, we come over here to ARK. Now, I know ARK has a lot of talk about it, and she's kind of got a little bit of a track record, whatever. And I get it, it's been coming down, maybe this is the bottom of the barrel type stuff. But the reason I'm showing you guys RIOT and the reason I'm showing you ARK is because the bottom of the barrel is making setups to go bullish. Now, we can figure out what this means, or this has ramifications, or maybe this is all just a fake out. But all I can show you is that this setup is exactly the same setup as RIOT. If you guys go back and look at it, it's the exact same setup. Notice we have price dipping below an uptrending daily 50 with the Moxie indicator above 0. And then the other one, we had a double bottom with positive divergence. Well, this time it's the same thing, just different divergence. Notice we have price down, but the Moxie indicator flat. That is essentially the same thing as a double bottom with Moxie indicator up. It's the same concept going on with that positive divergence. And again, look, there's your Moxie price trigger. It was the same place as RIOT. And so ARK is looking good. Now, again, I want to make sure I cover myself on this. We do have FOMC today. It depends on what they say and what goes on. And so all I can say is right this moment, these look good. Let's see what happens after FOMC, but these are setting up in the exact same ways. And so if these patterns work out, they look like they're bullish. Now, whatever that means for the market also, names like this, sectors like this that you would be surprised to be going up right now, given what the market's doing, are actually starting to build strength and move up. So, we just need to keep our eyes on the ball and make sure that we see these things happening and that they don't keep moving underneath our noses without us knowing. And then we're surprised that sometime later the market's actually in a bull run. Like, if that's what's happening, then let's not be surprised. So yeah, that's kind of where we're at. All right, guys. Well, thanks again. That's your Daily 5. If you like the way I talk and how I show these things, if you like the Moxie Indicator, come on over to the Moxie Trading Room. I'm on the mic almost every day like this for at least an hour, if not more. I answer your questions, I talk to you guys, and we have a really great time. You can find me on these other social platforms here. We are running some specials. We have $7 for a 30-day trial. Come on over. And really, if you guys like StockCharts, you can see I've got the Moxie Indicator on StockCharts. So you don't have to change your platform or anything else like that. Still use this, come over, learn a little bit, see how I talk about the markets, and see if this can help your kind of trading. We have lots of information, lots of education, and usually we're running specials in through here. So come on over, check it out over at simplertrading.com. And again, Moxie Indicator Mastery, that's the trading room. So thanks again, everyone, and we'll talk to you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.